Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now, let's have a look at some of the individual stocks on the move today. Here in Europe, I'm Caroline Hepker, and I'm joined by Bloomberg reporter Chloe Millay. So we have a major rout, I think you have to call it that, for Novo Nordisk's shares. Why?
Yeah, and a very, very tough morning for Novo. So the reason why is because it expects a very steep drop in sales in 2026, and that is because it's facing a lot of pricing pressure. So there's two main reasons behind that. There's, first of all, pricing pressure coming from the Trump administration's efforts to cap the price of drugs in the US. And then there's also pricing pressure coming from a growing price war between all of the companies that operate in that obesity space. So that includes, of course, Novo's biggest rival, Eli Lilly, but then also all of the smaller companies that are selling those cheaper copycat versions of weight loss drugs. So there's a lot of pricing pressure for Novo, and it's really feeling that hit. And 2025 had already been a very difficult year for the company. There had been leadership changes that had really rattled investors quite a bit. There's, of course, that competition that I've just mentioned, and also quite a few setbacks in terms of drug trials. And so the results today were really an opportunity for Novo to reassure the market, but instead they've painted a very bleak picture of what can be expected for this year. One bright spot might be the obesity pill that Novo is launched. Apparently that has been quite a strong launch. So we'll see if that's actually enough to offset all of those other challenges.
Yeah, I read in the Dow Jones that apparently there were 170,000 people on that treatment in the first 4 weeks. So yeah, that report of the pill, being taken up swiftly. But as you say, pricing pressures, I think you've made that really clear in lots of different areas for Novo Nordisk. Bloomberg's been speaking to the CEO about it also. What about the bank earnings, though? Take us through Santander, a big deal for the business as they really head to North America.
Yeah, they really do. So they are buying Webster Financial in a $12 billion deal. So really, really big acquisition. And so this marks an expansion in the US for Santander, and that is part of the company's broader strategy of wanting to expand in growth markets and maybe cutting back a little bit more from the exposure that it has to Europe. And shares were actually down this morning, with analysts saying that the deal might not be super well received because shareholders would have maybe preferred more shareholder returns rather than a deal. And there's also some questions about how tricky the integration is going to be for those two companies, given that Santander has to integrate both Webster and TSB as well, which it bought back in July at the same time. So any successful integration will be really key. And perhaps once that transition period is over, investors will be able to see the benefits a little more clearly. It's quite an interesting move for Santander because it's now one of the very few European banks to gain that foothold and want to grow that foothold in the US. BBVA sold its US operations, BNP exited the US retail market. So it's definitely kind of doing something that is kind of against the grain a little bit.
Yes, that's interesting. So that on banks. Then what about the continuation of the AI disruption trade? Because it is affecting a number of names, including LSEG in Europe.
Yeah, so that is definitely continuing today after the massive sell-off in those software and financial services stocks that we saw yesterday after, of course, Anthropic announced this new AI tool to automate legal work. And investors saw that as another sign that AI might be a major disruptor to those software companies. And so they rushed to limit their exposure to any company that might be seen as an AI loser. And LSEG is seen as one of those. It provides software, data, analytics tools to financial professionals like research analysts or traders. And the worry is that AI tools might actually be able to do this faster and cheaper. And so that is really dragging down those shares in LSEG this morning. JP Morgan analysts did say that software and IT services stocks were being sentenced before trial by investors. And part of this might perhaps be a little bit of an overreaction, but there has been growing concerns. And it looks like what was perhaps a more intangible worry has now become a lot more tangible for investors.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.